Hey there, my dollar scholars. Insurance Auntie here. I am so happy you joined me today. But before we start, I want to gently share that this video touches on the loss of a very young child. If your heart needs a little extra care today, please feel free to pause and just return whenever you're ready. Today's insurance story is one that still makes people pause mid-sentence when they hear it. Not because it's dramatic, not because it's flashy, but because it's quietly devastating and painfully real. And again, this story does involve the loss of a child. No, we're not doing graphic details. We're not going for shock value. Just truth, plain and simple. All right, let's get into it. This story is about a friend of mine. Yes, Auntie has real friends. Sheesh. She's smart, practical. She's one of those women who always reads the fine print, but not in a dramatic way. She just pays more attention. She had life insurance on herself and her spouse through work. She even had child riders, which Auntie's gonna just pause right here. Most people don't even know what child riders are, let alone add them.
Note: a child rider, or child term rider, is an optional, low-cost add-on to a parent's life insurance policy that provides a death benefit if a dependent child passes away. It covers biological children, stepchildren, and adopted children, usually from 15 days old up to age 18 to 25, and often allows conversion to a permanent policy later. Now back to Insurance Auntie. By the way, she's my friend too.
Aw, thanks, Adam. You're such a sweetheart. Now, back to our story. So, child riders? Check. Yes, she was already ahead of the curve. Then the annual open enrollment period rolled around. You know, that time of year when HR emails you 47 times, you ignore 45 of them, and then panic click everything the night before the deadline? Been there. She's going through her benefits, half distracted, half tired, probably with a kid climbing on her leg, and she notices something new. Accidental death and dismemberment for the kids. She already had it on herself. She already had it on her husband. And the cost? $1.50 a month. $1.50. That's not even half a fancy coffee. That's not fries. That's not a vending machine regret snack. That's nothing. But she hesitated for a second, because parents just don't want to think about things like that. Nobody wants to imagine the unthinkable. But she shrugged and said, "Well, I already have it for us, and it's just $1.50. Might as well." She clicked add, hit submit, closed the laptop. Life went on. The policy became active on January 1st. 16 days later, January 16th, her baby had an accident. And her baby didn't make it. No warning, no slow lead up, no chance to prepare your heart. One day you're wiping bottles and folding tiny clothes. The next day, the world splits wide open. And here's the thing nobody tells you about grief like this. Everything inside of you stops, but time keeps on going. Bills don't pause, mortgages don't care, jobs expect you back, eventually. But your soul is still on the floor, down to the center of the earth. So far down, you think you'll never get it back. And that's not the scary part. The scary part is that you don't care if you never get it back. When you hurt so much, you feel like the ocean waves have washed your body ashore on jagged rocks. And the waves just keep on coming. She didn't go back to work right away. Actually, she couldn't. She tried. She sat in her car some mornings and just cried. She'd open emails and feel sick. The house didn't feel like home anymore. Every corner whispered memories. Every room echoed. And eventually she knew, I can't stay here. She needed time, not vacation time, not bereavement leave that ends after a few weeks. She needed real time. Time to breathe. Time to grieve without pretending to be okay. Time to figure out how to exist in a world that looked the same but felt completely different. So she took almost a year off. A year. Most people hear that and think, must be nice. No, it was not nice. But it was necessary. She sold her house, she moved, she rebuilt her life, slowly, imperfectly, painfully. And she was able to do all of that because of that $1.50 decision. Now here comes the part that surprises people the most. Years later, when she tells this story, she doesn't talk about the money first. She talks about the moment she clicked that button. She says, I almost didn't add it. It felt unnecessary. It felt uncomfortable. It felt like tempting fate. And then she says something that sticks with me. That wasn't a money decision. That was a future version of me looking out for the worst day version of me. Whew, that'll sit you down. Here's the relatable ending nobody expects. She still hates open enrollment, still groans at the emails, still wishes insurance language was written in plain English. But now, she reads everything. And every year, she checks one box very intentionally. Not because she expects tragedy, not because she's pessimistic, but because she understands something most people don't learn until it's too late. Insurance isn't about dying. It's about how much pressure your life is under when something goes wrong. And sometimes, the smallest decisions carry the biggest weight. So if you ever find yourself hovering over a box that costs $1.50 a month and thinking, probably unnecessary, just remember this story. Not because it's scary, sad, and unthinkable, but because it's honest. It's real life. This is Insurance Auntie reminding you, you don't buy insurance because you expect the worst. You buy it because you love the people who might have to live through the worst. Okay, y'all stay safe out there. Auntie loves you. We'll see you in the next one.